Hello and welcome back to goldstocktrades.com. Today we have a new and special guest with us, Chris Stewart. Chris is CEO of Treasury Metals, which can be traded as TML on the Toronto Stock Exchange and as TSRMF on the OTCQX. Thanks, Chris, for being here with us today.
Yeah, thank you very much.
Chris, talk to us about your background, most specifically your recent successful experience at Kirkland Lake gold mines and some of operating mines, in particularly in Ontario.
Yeah, no problem. I graduated Queen's University back in '92 as a mine engineer, and immediately jumped in to mine contracting, actually. So I worked all over Ontario, building and expanding operations for a large client base, including Inco Valley and Sudbury, Falconbridge, which is now Xstrata. Also worked up in Red Lake in Bombertown. Again, one of the richest gold mines in the world. And then after I did that for 15 years, I decided to move over to the company side of things and joined Lakeshore Gold in Timmins, where I constructed the new Timmins mine, including a shaft and a ramp from surface, and refurbished and got the Bell Creek Mill up and running for that company. And then stepped away, went to Jansen out in Saskatchewan, where I was in charge of the freeze-hole drilling for the two new shafts that they're sinking out there. And then back in 2011, I got the opportunity to move into President and CEO role for a nickel company based out of the Timmins camp as well, a little company called Liberty Mines. And then most recently, I was with Kirkland Lake Gold. Started there sort of Q1 for Kirkland, actually, in May 2014. And for those of you who remember, the company was in a distressed state, hadn't made money for 13 consecutive quarters, was very close to bankruptcy, actually coming out of the year 2013. And in 2014, we went in and basically turned the Macassa operations around, started to generate positive cash flow right out of the gate, Q1 2014. And, over the course of the next 2.5 years that I worked there, we took the company from around the 260 million market cap to a high of almost 1.5 billion. Did the successful integration of St. Andrew Goldfields. We did that acquisition in January of 2016 and started to look at the Newmarket deal, actually. And then I left mid-September of last year, 2016, and as everyone knows, the Newmarket deal closed in October, and that again, since then, that market cap's doubled again. So very successful story. A lot of really good people worked hard to turn those operations around and make it the company it is today. So now I've got the opportunity with Treasury, where it's a small company, upcoming asset being the Goliath deposit located just outside Dryden. And our plan is essentially start to leverage the success of moving that property into production and then start to build another junior gold company.
Yes, Chris, that was an exceptional turnaround at Kirkland Lake that you were involved with. And let's talk more about the Treasury Goliath Gold Project. There's very few projects in Canada that has this short time frame to production, an attractive valuation, and a really nice high grade. Talk to us about what makes you so interested in the Goliath Gold Project and what brought you on board Treasury Metals.
Yeah, we hit on one of the top ones as to why I came on board. It is only, one of a handful of projects remaining in Canada, Ontario-based, with near-term gold production. So for myself, that was very exciting. Again, I've worked the majority of my career in northern Ontario, very familiar with the regulators, all the stakeholders that get involved with building mines and operating mines. So I think of it as a bit of sort of my backyard. So I was very comfortable with the project. Goliath actually benefits as well from having excellent infrastructure on site. So when I was looking at the company, currently we're in and around sort of 75-80 million market cap. To think that we're going to go and build a great big mine with $1 billion market or initial capex, unrealistic. Whereas if you look at Goliath, having all the infrastructure right on site with power, natural gas, roads, all these important things are already there. A town of 7,500 people 20 minutes away, the town of Dryden. Again, you couldn't really have picked a better location to find a mine. And what that does is actually drives down the initial capex significantly. So, we're looking at 133 million initial capex based on our updated PEA we did earlier this year. Which, when you look at our company again, and as we continue to de-risk and move through some of the key milestones over the next 12 to 18 months, I think we'll be in a great position to be able to actually, get this thing financed and open up a new mine in Ontario, which is very exciting. The other thing I really like was the exploration potential of the property as well. Right now, our current resource only goes down to around 600 meters, and when you look at all the gold mines I've worked at around Ontario, typically they're down, 13, 14, 15 to 1,800 meters below surface. So when you start looking at 1.5 million ounces down 600 meters, if that's 1,200 meters deep, we potentially have 3 million ounces there. And if it goes down to 1,800 meters, you potentially have, 4, maybe 5 million ounces there. So my view, it wasn't 1.5 million ounces at Goliath. It's some number bigger than that. Is it 4 or 5? I don't know, but certainly I think there's lots of opportunity to see the resource grow as we continue to advance our drill programs.
Chris, you mentioned...
And one other key thing I should mention is our project is essentially unencumbered as well, which is very rare in today's day and age. And what I mean by that is when we ran the financial model for our PEA, we were paying $1.6 million in royalties on a revenue of $2 billion. So I say it's essentially unencumbered. There's no large streams or NSRs or anything like that on our property, which really gives us a lot of optionality when we look at how we're going to finance and bring this project into production.
Yeah, no streams. That's an interesting... I didn't realize. Also, question, Chris, on you mentioned the next 12 to 18 months. Could you take us through sort of where the company is at right now and sort of how you're going to transition through the rest of 2017, 2018?
Yeah, certainly. So when you look at our Goliath project, again, it's our flagship property. We've got some 240,000 meters drilled on site in the resource thus far, and we've started a phased exploration program right now with a plan to do 30,000 meters more drilling. So right now we have phase 2A of the infill drilling underway, which is about 5,000 meters of drilling on the central chute of the main zone. So we have a drill turning on site right now. Our plan is to continue with infill drilling on the western and eastern chutes as well, coming towards the end of this year, and then move out and actually do a bit of sort of more pure exploration type work, looking to the northeast along strike, where we think we have the potential for one, maybe two of these more high-grade chutes, gold chutes, and near surface. And then we're also contemplating looking at doing a deep hole, maybe 1,000, 1,100 meters below surface, but we have a bit more work to do on that. But we are, again, looking to maybe test the depth potential of the deposit as well. So lots going on with respect to the drilling side. At the same time, we're continuing to work through our federal EA process, which is essentially the overarching permit we're looking for to move this project into construction. So that's continues to progress very well. Right now we plan on having that permit in hand by the end of 2018, and we're on track to meet that objective as we stand today. And then at the same time, we're looking to move into a feasibility study on the property. So we're looking at starting with a few trade-off studies. There's technology today that I think could really help the economics of our project that we haven't even looked at in the past. And based on my experience coming from Kirkland Lake Gold, where we use battery equipment there to produce 60 to 65% of our ounces coming out of the Macassa mine were produced with battery equipment. The health benefits for our workers, as well as not having to handle diesel fuel up and down the mine, really opens up opportunities to look at battery-powered equipment. And so we want to make sure that, when we're building a new mine here in 2017, well, building it in 2019, but we want to make sure that we're actually taking advantage of technologies and advancements in the industry before we, instead of looking at just mining the same old way, we're trying to be innovative and build in what efficiencies we can to make our operation even more cost competitive. So we're looking to start that study here in the next sort of month or so.
So, Chris, it's an advanced project, but what many investors don't realize is the exploration potential here. I saw the news recently that you've commenced drilling a 30,000 meter exploration program. That's pretty significant for a junior miner. Could you talk to us about this exploration program and what some of the goals of the program are?
Yeah, no, certainly. As I said, right now we're taking a phased approach to the drilling, with our focus to start with is on infill drilling on the current resource. So what we're trying to do is actually move inferred resources into the indicated category, and then our plan will be to update the resource once more, 43-101 resource update, early in 2018, and then that resource will be what gets incorporated into the feasibility study that we'll be working on here shortly. So what we're trying to do is essentially go into a feasibility with the most robust resource that we can, because when you do a feasibility study, you can only use measured and indicated resources. You cannot use inferred resources. So that's the focus of the first part of the program. And then, as I mentioned, with the second half of the program, what we're actually trying to do is increase the size of the resource by getting some inferred resources. It won't help us in the feasibility, but it will help demonstrate, how robust we feel our actual deposit is by testing out to the east, northeast, along strike, as I mentioned, where we believe we have a couple more of these high-grade shoots, and also potentially looking at the at-depth potential, again, just to demonstrate to people that, this is something more than 1.5 million ounces as we know it today.
Chris, as we can conclude here, Chris, on Treasury Metals, talk to us about where Treasury fits in compared to its peers. It really seems like an undiscovered story when you compare it to the other advanced projects in Canada.
Yeah, no, I think that's a fair comment. As we mentioned, I just joined, some 9 months ago, and I remember hearing about the Goliath project a number of years ago when I was back at Kirkland Lake, and I think sort of what happened, the Rainy River project jumped up to the forefront, and it got, getting built and, entering into production. And I'd say the Goliath project being a small project, it was, when you looked at the original PEA that was done back in, I think it was 2012, maybe around that date, the NPV was about 133 million. So it was a fairly skinny project. It wasn't a high production scenario. With the update that we did this year, just after I got on board, we went back and tied in a resource update that happened in 2015 to the economic study with the PEA. So we updated that in January, February, and what we saw was the NPV go to 306 million post-tax with an IRR of 25% and an average production profile of around 90,000 ounces a year. So that, 90,000 ounces a year starts to look pretty sexy when you're looking at, a small operation that you can start to lever the success off of that to start building another junior gold company within Canada, right? So what we're going to look at in the feasibility stage is, can we actually, move that to maybe the 100,000 ounce mark? We do actually have 4 years where we're over 100,000 ounce production right now based on the PEA. But what we'd like to do is see if we can actually get there and maintain that as we move forward with the operation. Current mine life's 13 years, so it would shrink the mine life slightly, but certainly, 100,000 ounces is kind of our target. And we think that's a real sweet spot for, a nice little gold mine, northwestern Ontario.
Chris Stewart, CEO of Treasury Metals, which can be traded as TML on the Toronto Stock Exchange and as TSRMF on the OTCQX. You can get more information on Treasury Metals by going to treasurymetals.com. Thanks, Chris, for being here with us today and for giving us an update on the Treasury Metals story.
Yeah, no, thanks very much, Jeff. Appreciate it.